Hey folks, it's Celeste Barr with eXp again with Jerry DuPaw with Rate Mortgage. And the reason we came back for another video is because it seems to me that one of the questions that I see that comes up quite a bit from buyers is asking the question of, how am I going to get pre-approved? What's involved? And they're very myopic in their thinking that there is a loan for one person and that's the same loan for the next person, and they're on. And here's why I'm bringing this topic up. Jerry, share with us some of the different kinds of scenarios that you get where people, they're not the typical buyer. Maybe they're not the first-time home buyer. Maybe they have some other kind of scenario. Maybe student loans. I don't know.
Okay. Yeah.
Can you share something about that?
Sure. I mean, I could just think of one that just happened yesterday as far as someone that applied. And to apply with us, it's super simple. I mean, they just download our Rate app and it takes them about 15 or 20 minutes to fill out their information the best they can. It doesn't have to be perfect. I'm going to call them back anyways after it's all done to make sure it's all right. And then once I have everything together as far as all the pieces of the pie, because we look at income, assets, job history, there's a number of factors that goes into, approving a loan, and different loan programs have all different qualifications for different types of loans. Like, for example, the one that applied yesterday happened to be a first-time home buyer, but they did have some money saved up. They had $10,000 or $12,000 saved up. So they had some options. They could go with a regular conventional 3% down loan and use the money that they saved up. But I also gave them some down payment assistance options, because there are some options where they could, get some down payment assistance to kind of keep the money that they saved up, maybe, to have as in reserve, or, when you buy a house, you're going to need to buy some things. Maybe it needs a little upgrading. I don't know. So I gave them, there was actually 3 different options that they were given. Those were the first-time home buyers from yesterday. The day before, I had a client call, and they were investors. And it was someone that was looking to, buy an investment property and rent it out. And we have a fantastic program for that, because these people happen to be self-employed, and they did write a lot of stuff off. So they were worried about not being able to qualify because they don't show a lot of income. But they have a housing history, so they've made their mortgage payments on time for the last year, and that's the requirement for this particular program. But as long as someone has 20% down, and as long as the appraiser says whatever the home will rent for is going to be more than what the mortgage payment's going to be, that's all we need to qualify.
Wow.
We just need to show they have 20% down, and the rent's going to be higher than what the mortgage payment's going to be.
Okay.
It's really incredible product and program. It's so simple to underwrite, and it goes through very quickly because of that. So I have people buying multiple investment properties using that type of program because it's just so fabulous for people.
Incredible.
Another one I can just think off the top of my head is a fellow that owns a auto repair shop, and again, for the past 8 years, he shows about $45,000 a year on his tax returns, even though he makes a lot
much more.
So send me your last 12 months of business bank statements, or you could use personal bank statements, but we look at the last 12 months, and an alternative way of looking at income, rather than looking at someone's tax returns, we look at the deposits that have came in over the last year. And then we average those deposits over that year, and then we come up with an expense ratio, like some businesses have 30% expenses. So we go off of those numbers, and this fellow went from making $45,000 a year to $70,000 a month.
Oh my God.
That was the difference in qualification to be able to, so being able to qualify for like a $150,000 house, or 180 all the way up to like a $10 million house. So
oh my God.
You can see there's a massive difference. And not all lenders have this type of stuff. Guarantee Rate's the largest purchase lender in the country. We're the most trusted by realtors, in my opinion. And we just have every product and program there is available in the marketplace to be able to offer people to help with their particular situation.
And I'm going to add to that I feel that as realtors, we often find ourselves getting very myopic. Again, the word myopic shows up. But we have this mindset that either someone is buying a home with conventional, or they're going FHA, or maybe they're going VA. And that's the tip of the iceberg.
Sure.
As far as what really is able to be done. So you might say, well, this buyer has X amount of money that they can put towards the purchase. But when you consider all of these other elements,
right,
their income, their business structure, however it is that they're using their tax accountant to try and write off funds, they will sometimes, because they heard a soundbite that you have to have X amount of money to purchase a home, they're discounting themselves before they even make it to the table, the starting line. So again, I'm going to go back to keeping an open mind for what your client is able to do. Helps to have people that are, in my case, I'm calling you my resource. Having lenders like Jerry are my resource to help my clients. And my job isn't to know the financials. I don't want to know. I don't know if I care. I really don't. I mean, I sound so flippant, but what I care about is having people like you that I can say, here's somebody that might be a good candidate. I don't know more than that, other than I believe they could be. Can you vet them? And then discuss with them what their options might be. Because my job is to make the music happen about the house. I walk into a home and I know what I'm looking at. I can tell someone about their construction. I can also discuss with them if it's a good location or if it's a bad location or if the construction lends itself to having future issues. That's my thing. But I don't know the numbers and I don't want to know the numbers. I like people like Jerry that do their thing. So I guess in summary, what I would say everyone needs to do is reach out either to Jerry or myself. We would be happy to have a conversation with you. That's it. There's no obligation.
Absolutely. We look forward to talking with you.
Yeah,
Thank you.
Likewise.